Hey, Kevin here, top 100 financial advisor and best-selling author, and we are here to talk about the stock market. I am reacting today to a comment that I received, and that was, I lost half my portfolio in this company. What should I do next? I am afraid that I could lose even more. Now, I don't know the person. I'm only reacting to the comment, and I think there are some things that we can learn from this moment, okay? Let's get into it. So it's ticker symbol SPRT. It's support.com. And y'all know that three-step research process. I'll kind of walk over it and kind of talk over it just a little bit. But this is one of those examples of what may have happened is jumping into something you may not understand, because I'm just going to read you the first few headlines that I looked at before. You're just like, okay, they lost money, they gave me the ticker symbol, let me go look at it and see what the problem is. So without even looking at it, I'm like, it's probably a penny stock. These are stocks that are less than $5 or less, which tends to be pretty volatile. For new investors, you should probably just avoid them altogether. I would venture to say that all investors should avoid penny stocks. Why do I say that? Number one, that volatility. Some days, a penny stock can be up 200%. It can happen. Other days, you turn around and it's down 75%. That's just the nature of penny stocks, and it's a hard game for you to play and be successful on a consistent basis. I have not seen a single one of my millionaire clients that have gotten rich from investing in penny stocks. I haven't seen it. I'm not saying it don't exist. I'm just saying I ain't seen it. I have not seen it. Right? You can look at, if you want to take the billionaire route and look at the billionaire investors, you don't see Warren Buffett with penny stocks. You don't see Carl Icahn with penny stocks. You don't see it. It is too difficult to hit each of these companies right consistently. Even when you look at like the financial influencer space, right? People that you may see on YouTube, Instagram, all that kind of stuff, a lot of times they're not telling the truth, to be honest with you. And then again, you do get some that are lucky. But again, it's super, super hard to do that consistently. So the first thing, that was my first assumption, because if you lose half of your portfolio, it's probably a company that just isn't all that good. That's not quality, right? I know Target is not going to lose me half in a short period of time. I know Apple is not going to lose half. That doesn't mean I'm not going to lose, right? But I ain't going to lose half, right? It's Apple. I can see it. I can touch it. I can feel it. It's been out here. It's not going anywhere. It's definitely not going down by half. So I'm just going to read you some of the first headlines. I hope that you pull up the company as well. So first off, I go look at the first investing app I have. They can't even load the chart, and there's actually a warning that says high risk. Guess what? You tell me something is high risk and it's got my money in it, I'm probably not going to invest. That's warning sign number one. If I scroll down a little bit and start to look at some of the other headlines, why is support.com crashing? Why is support.com shares sliding again today? Probably not something I would look into. Another one, support.com's new merger. Keyword, there's a merger that may or may not be a good thing for this company. And it's another example of late bull market mania. Okay, so there's a merger going on. It's been sliding consistently. That's something that I might want to be aware of. And then I flip over and go to Yahoo Finance and see what's going on there. One of the first headlines I see here, SPRT, that's the ticker symbol, alert. What's setting hot meme stock support.com higher on this fire, setting it on fire this week? And this was August 27th, so this is a dated article. You got all the warning signs of something you probably shouldn't invest in if you are a beginner. And even if you do, there are some parameters that you might want to use to protect yourself. So I want to give you some of that as well. Now again, you do what you want to do. You do whatever it is that you want to do. But I'm here to tell you, I've seen what works. I know what works. I've been doing this for more than a decade, okay? Penny stocks is not the easiest, most consistent way to build wealth. I didn't say you couldn't. I said it is not the easiest, most consistent way to build wealth. Take that for whatever it is. However, again, I got a high risk warning on most apps. It's going to tell me that off the bat. You put it in the meme stock categories, probably not the safest thing for me to do. And the first few headlines tell me there's a merger going on, which a merger is not bad in and of itself. A merger is not bad. However, directly after that, I got two headlines, and you really want to read the entire article, which is shortness for a video. I had two headlines talking about why the stock is absolutely failing. And the fact that the chart didn't even load tells me it's something wrong. Okay, so those are all the red flags. I'm not putting $5 in this thing. I'm not doing it. Okay, so how do you protect yourself if you've done something like this and you've lost money? Is there a chance that this stock could bounce back and you get some of your money back? That is always possible. I cannot tell you whether that is likely or not. I don't know, and every company is different. There are some people who bought a company that was absolutely trash, and after months and months and months and months, for whatever reason, it popped up, and they cashed out and they were fine. There are other people who have lost, and it goes down to a penny or nothing, and they just cut their losses. But what I will tell you is this: the best way to do this, if you decide to do it, which I do not suggest you do, is do what is called a stop loss order. You can do this on most apps. In fact, I don't know an app that you cannot do this on, and that is essentially you say, look, if this company drops below this price, I am getting out of the stock, and it will do it for you automatically. So you can almost say, look, I'm not going to lose more than $50. When I lose $50, it's out of here and it's just done. There's one way to protect yourself, especially if it is a company that is volatile like this one is, or like a lot of these companies are that end up in that meme category, end up in that penny stock category, and this is how people get burned. And they don't want to invest in real companies because they think it's too risky. When in reality, you just invest in something that was risky. Whereas Apple, right, you are taking on a risk, but I don't find Apple risky at all. I don't find Microsoft risky at all, right? Support.com, never heard of them, okay? Now, that's not to say that Support.com can't be a great company down the line. It may be, but right now, it is clearly not the time to invest in that. So, red flags. Always read about the company first. 3 to 5 articles will give you a decent idea. Okay, that's number one, and these don't have to be in order. Number 2, check the chart. I always like, and this is why when I tell you guys about companies, I look at the last 6 months, I look at the last year, and that's going to tell me to dig more into it or to just leave it alone. If you tell me a company is down 20% in the last 6 months, I'm good. I don't need it. No, I'll go on to the next one, right? I don't need to invest on the down end and continue letting it down. I need to see the company kind of moving in the right direction, and then I'll hop on and keep moving forward. The company I told you about yesterday, Bath and Body Works, I said that one right today, Carvana and others, they're all up and may continue moving up. So I should be, right? I should be okay, and things should continue to move if what I think about the economy is true. I'm not going to do something where it's like, hey, look, it's down 30, 40%. Let me get in here and hope that it's going to change direction. Those two things in and of itself, checking the last 6 months and the last year, that's going to tell you to do more research or not. That's number 1. And again, I know I'm numbering these in whatever order, doesn't matter. And then I'm going to check the news and see if the headlines as well as the article. Always read the article, don't just check the headlines. Is this good enough for me to do more research on? And then you can go and check the company's website, and again, you can check that entire video. That's what can help save you money. If you still aren't entirely sure, then set up that stop loss limit, that stop loss order, so that if what you think didn't happen happens and the company drops, you get out and you know what you're going to lose, or you know right around what you're going to lose. An example for me, I got up here, and I still like PayPal, but I did a video on PayPal. I wanted to do a trade for PayPal. Y'all remember that? It was what? Maybe 8 weeks ago. Go back. I encourage you to go back and watch that video. Since then, right, we had the whole government shutdown scare, we had the whole debt ceiling stuff, and September happened. The market was trash all of September, but I had that stop loss. And when I lost enough money, and I don't remember the exact dollar amount, but it hit the stop loss, got me out, and said, hey, look, that was it. I was trying to do a shorter term trade for PayPal. I think PayPal is great for the long term, but try to make some money within 8 weeks or so. Didn't happen. But guess what? I didn't lose half. Didn't lose half, right? That I limited that loss. I stopped the loss. I get to take my money and move on to the next one. So what did I do with that money? Put it in a Carvana. And again, this is a short-term trade for me. I'm looking at, before the end of the year, really, I would say probably 5 to 6 weeks for this one. Got 2 shares of Carvana. That's close to $600. I got it at $300. That's the price I wanted to get at. If Carvana goes to $275, I'm out. And I lose $50. $25, 2 shares, right? That's it. That's it. Now Carvana, I think Carvana's going to go higher. If Carvana gets to $380, then that's it. It will sell out automatically. I don't need to worry about it. I just need to sit here and wait for Carvana to hopefully go up. If something happens in October, and October is a rough year or a rough month, which that is possible, right? Then guess what? I'm not going to lose more than about $50. And I'll take the other $550 in that trade because it was 2 shares, $600. I'll take the other $550 and go do something else. My loss is limited. I did the research on Carvana. We talked about it. I was going to say on the show, but we talked about it in the video. This is what it means to have a plan. This is what it means to have a plan. Your plan may not go the way you want it to. Your plan may not be right. I have been wrong from time to time. Not often, but having that plan does matter. We talked about Dick's Sporting Goods. I wish I put more in it, but I was right. Stock was up, right? I only made 23%, but hey, I'll take that, right? But again, having that plan is important. That's why you hear when I say, like, I'm looking in December, I'm selling and switching things out. That's the plan. You need to have a plan. If you don't have a plan, things like this can happen. So to answer the question, yet again, if you lost half of your money, one, I don't think you should wait until that point in time. I think if it is a risky stock like that, then you need to have a stop loss. If you think you're going to hold something for a long term and you know it's solid, you don't necessarily need one for that. I don't have one for Google. I don't have one for Microsoft. I don't have one for Apple. That doesn't mean that they won't go down. They've gone up and down all the time. But what I don't want to do is it dips temporarily, I sell out of it, and then it goes up and I just completely forget about it. Those companies, those long-term companies, I'm not worried about those at all. I'm dollar cost averaging all the time. My index funds, ain't no stop loss there either. We're not doing nothing with those, but putting more money into it and leaving it alone. Right? So that is it for me. I hope that I helped. Let me know what you think in the comments. Wanted to espouse all those things. Hope you guys have a great weekend. I'm going to have fun tomorrow. I'm not doing anything but going to my son's soccer game, and that'll be entertaining because he's 3 and all kids do is fall. Hopefully there aren't a lot of tears, but I'm doing that, and I'm watching college football all day. All right, let me know what you guys think in the comments. I'll talk to you guys later. Bye.